All right, here we are back in the old portfolio, and this week we've got some good news and we've got some bad news. The good news is I've got this snazzy new dashboard. I've connected my portfolio up to Snowball Analytics, not sponsored, of course, much as I'd like to be. We have $1,601 in the portfolio at the moment, a little bit down on last week. As you can see, we've got my portfolio here made up of two financials and one consumer discretionary financials, Pepper Money, National Australia Bank. And the consumer discretionary is Fleetwood Corporation Limited, which brings me to the bad news. So as you can see, Fleetwood Corporation took a hammering last week, down 20%. So I was feeling pretty good about my choice of Fleetwood Corporation. I did my research, I looked into it, I was tempted by the dividends, and about a day and a half after I made my purchase of shares in Fleetwood Corporation, the share price plummeted. That's the game, as you can see here. So you can see where I've made my purchase here on the 20th of Feb. Then bang, down we go. So that is the roller coaster ride we're on when we're investing in the share market. Not great. So I've lost about $100. So I invested $500-ish and I've lost $100 in the space of a couple of days. So we do have a dividend forecast. So one of the good things about Snowball Analytics is we get these dividend forecasts. So you can see that my upcoming dividend from Fleetwood will be about $22, and across the year $76.64. So that's pretty cool. So even though the share price is down, I'm expecting some dividends to come in over the year. So I'm not going to panic, I'm not going to sell, but it was a bit of a kick in the guts, I've got to say. And why did it drop 20% pretty much overnight? The day after I bought Fleetwood Mac, as I like to call it, Fleetwood Limited released a report, released their half-year results. So great timing. The half-year result showed lower revenue, higher net profit, cut its interim fully franked dividend to 9.5 cents per share. On the strength of news, the share price fell 20%. So since that fateful day, it has crawled back a little bit. So we went all the way down to 203. We've crawled back up to $2.15. So a little bit of dead cat bounce. I'm not too fast. Hopefully it'll just, work its way back up. The dividend yield is still juicy. It's 12.32%. It's gone up because the value of the company has gone down, I assume. So I won't get 12.32% on my investment because I bought it when it was worth a little bit more. So I watched this Mark Tilbury video recently, and he covers some basics of investing and touches on the mistake that I made or am making with my portfolio. So I'm just going to let it run, and we'll react to some of the things that he says. He's got some good advice here.
So by the end of this video, you'll know my actual strategies for picking great stocks. And don't worry, I won't be trying to sell you anything, so you can just sit back and relax.
This is going to be great. He's going to let us know how it's done. I don't mind Mark Tilbury. I reckon he's a pretty cool guy. He kind of reminds me of your wealthy uncle that tells you all about how he made his millions at Christmas lunch. So hopefully he's got some good advice for me.
Two main ways to attempt to predict the stock market. These are called technical and fundamental analysis. A good way to think about this is like a scale. Usually short-term day traders are purely focused on technical aspects. These include looking at charts and patterns. They believe that they can predict how the stock will change in price by judging the highs and the lows on the graphs. They're the geeky ones. Nah, I'm only kidding. It's just not how I do it.
Not sure if Mark is qualified to call other people geeks. If you look up on his shelf here, he's got some giant remote controlled cars. I'm pretty sure this is how he's made his money, selling remote controlled cars. But, takes one to know one, I guess, Mark.
My whole investment strategy is about keeping it simple. Lots of people talk about using margin and options, but that's really not something I worry about. I'm a long-term investor, so this means I'm a lot more focused on the fundamentals of a company. This includes the financials, the leadership, and the brand recognition, as I believe this is where the information lies to indicate the long-term success of a stock. However, like I mentioned, it's a scale, so I do cast my eye over the occasional chart in order to find the best time to buy.
I kind of agree with this approach. So basically keeping an eye on, trying to find good companies that are going to make money over time, but taking a look at charts as well. In the case of Fleetwood, the chart is indicating that things are going horribly wrong, but I agree with what Mark's saying here.
Rather than just dipping in and out and trying to make a profit on a daily basis. The amazing thing is the majority of professional traders are still unable to beat a low-cost index fund over the long term.
Yeah, that's the amazing thing, that studies have shown that it's almost impossible to beat the market. So there's all those people out there claiming to be able to beat the market, and you should, give them your money. Or day traders, for example, who think that they can give up their day jobs and just make money on a daily basis just doing day trading. when the research shows that that's highly, highly unlikely. So I think what Mark is saying here about, stick to the long run is, I agree with that.
So this bucket represents an individual stock, and the water is me pumping all of my money into that company.
We're outside now. Mark's got his jacket on. He's filling up a bucket of water. This is a nice metaphor for us. It keeps it nice and simple. And this is me pumping all my money into one company. So this is the mistake that I've made.
This represents an index fund, each cup being a different company. And the water I'm putting in is the money I'm spreading between each of them in one easy investment. For whatever reason, if this company goes bankrupt, then guess what? Or my money goes down the drain. Now this is the same company and it still goes bankrupt. But the good thing is I may lose my money in that small investment. However, I've got so many more stocks and I've done really well in some of them, which means I've actually made a profit overall.
Yeah, it's such a simple metaphor that a child could follow it. And it reminds me a little bit of a TV show we had in Australia called Play School, where they would use props to explain simple concepts. So he's basically explaining diversification, and ETFs, automatically diversify for you, which is great. What I'm doing is a little bit different to this. So I'm picking individual stocks, but trying to build up a diversified portfolio as I go along.
So even though the majority of my money goes into index fund investing, I also have a lot of fun picking individual stocks and watching my portfolio grow.
Yeah, and that's what I'm trying to do here. I'm just trying to have some fun, make some money, have some fun.
On this note, if you'd like an easy way to get started, Public are currently giving away a free stock worth all the way up to $50 when you fund your account. If you want to pick that up, I'll leave a link in the description. And if you're in the UK, Free Trade are giving away a free stock that could be worth up to £200 when you deposit as little as £2. I'll leave that link below as well.
Hang on a second, Mark. I'm pretty sure you said earlier in the video that you weren't trying to sell us anything. Where did he say that?
And don't worry, I won't be trying to sell you anything, so you can just sit back and relax.
Okay, I'm feeling relaxed now. Thank you, Mark. All right, so that's basically it. The big mistake that I have made so far with my portfolio is that I don't have enough diversification. And as you can see, I've got 3 different companies and 2 of them are in financials. So I've got to take Mark's advice on board here and start thinking about what I can do to expand my portfolio, get something else on the list. I am enjoying the Snowball Analytics dashboard. It's pretty snazzy. But that's it. I hope you enjoyed the video and I hope you got something out of that. See you next time.